What's up? Good morning, guys. How we doing? Thursday? Coming into the second half of the week. Let's see if we can get it done here today. So, yesterday was a crazy day, huh? We got a lot of unexpected tariff talk, or headlines, I should say, yesterday. And that led us to this weird market environment. I talked a lot about this in last night's video recap, where we're seeing a lot of average volatility bars in the last couple of days, honestly, maybe below average. And then all of a sudden you'll get a tariff headline and boom, the bar moves 120 points versus a 25, 30 point average. So we're going to see if we get that here today. Honestly, I'm hoping it smooths out a little bit. I want it to stay volatile. I would take yesterday's market over a dead market any day. But if we can get a little bit smoother today, that would be ideal for all of us, I think. Now, business first. As usual, we are coming to the bell here. We got U.S. initial jobless claims and durable goods here at 7:30. That was Central Time. And as far as other news, that's pretty much it. And we have a few earnings calls here this morning, but those are probably finishing out here by now. We get existing home sales at 9. And that's really it. Obviously, we have some earnings after the bell. Alphabet, Intel. There is the bell. Kashkari is speaking after the bell, but we'll be long gone by then. Good morning, guys. How you doing? There is the opening bell. We're getting a bit of a push higher. Not a whole hell of a lot out of the hole, though, into the opening bell. What's up, guys? Josh, Brian, Christian, welcome back, everybody. Ram, Panther, how you doing? Old school Scooby-Doo, what's up? Good morning. Maury Marshall, Honest Athletes, Savan, JM, what's up? V Gibbs, John, Rick, what's up, guys? What's up, guys? Familiar names from everybody. All right. Honestly, not a ton of volatility here off the open. You guys seeing this? Off the open, we've had so far maybe 30 points of movement. Oh man, I hope this is not representative of the day we're gonna have here today. Bob, Tube, Skeeto, what's up? Scott, how you doing? Good morning. Mitz, Exposed, Peter. Dale, what's going on, guys? So I'm curious if you guys have had this issue. I was 5 minutes behind on stream, and that was for a very good reason. I was trying to figure out with support a trade evade issue that I'm having. I think it's a trade evade problem. I don't think it's a take profit problem, but I was on support with Take Profit Trader. They didn't know what I meant. They sent me a report, and anyway. So I'm now trying to go to trade evade and figure out what's going on, but I'm well above the buffer in my Take Profit Pro accounts. And yesterday you guys saw, yesterday was a pretty decent green day. Most of the profit, though, ended up in my Apex accounts, which is totally cool, and a small amount of profit in the Take Profit accounts, but it was green. I logged into TradeAvate and made sure that, you know, hey, maybe is Ninja Trader displaying this wrong? No, it was all right. All the P&Ls were correct. And I wake up this morning, and I check my balances in the Take Profit portal, and it's missing a whole bunch of money, and not from withdrawals that I've taken. Okay, this was different. It was just missing money. It just poof, vanished. So I don't know. I mean, it's all documented. So, I mean, I'd be shocked if TradeAvate didn't fix this. Again, I assume it's a TradeAvate problem. I'm still well above the buffer, so I'm not really concerned about it today. My one concern this morning, though, is like, okay, if I trade in these accounts, it's just going to confuse support. But whatever, I'll just send them everything they need. I'm not too worried about it. Savan, got 4 accounts with big coupon. Yes, by the way, if you guys need some Apex accounts, it is still 90% off, but that ends today. Today, last day, 90% off, single day pass at Apex. That's the best it gets. Use code BIG, B-I-G. Chris, did they recalculate slippage? Nope. The official reports showed exactly what I showed yesterday. There was no recalculation. This is simply some kind of error. But I don't know. I don't know where the error came in. I assume it's trade evade because, again, Take Profit had no idea what I was talking about. But I think maybe that was just the rep I got. How are you liking the affordable indicators? I assume we're talking about the copier. So this copier, again, I have no affiliation. I'm just testing this and then telling you guys what tool I like. I like it. Yesterday, you guys saw that last trade I took yesterday was crazy. It had a little bit of issue, but honestly, it handled it pretty damn well. I was pretty impressed. I don't know. It's good. It's good. It functions just as well, if not better, than Replicanto. In my experience, even though I did like Replicanto a lot, but I'm going to stick with affordable indicators here. And obviously, it makes it easy. It displays such a basic feature to show the total P&Ls that for some reason, a lot of copiers don't have. So, I like it. Yeah, John, they have a whole bunch of tools. Joel over there, he's been building stuff for years. Old school, my Tradevate 3 evals are all what they should be. Yeah, I don't know. I'll get it figured out. I logged into Tradevate and looked at P&Ls. They were exactly as I understood them here in Ninja. They were exactly the same. I downloaded the PDFs and the CSVs to look. Hey, is this maybe did Ninja Trader display the P&L wrong or something? Maybe I was actually no, exactly the same across the board. So obviously there was some kind of problem. I'll figure it out. But we are still well above the buffer, so we're fine today, as long as today's trading doesn't confuse support, which is my one concern. But hopefully whoever I get will figure it out. All right, gonna let these institutional orders finish clearing up here. Then we will start looking for setups. So as far as sizing today, again, that's all those in the size column, that's all based on a 1 micro, no ego, 1 micro baseline. So you can see like the take profits, I'll be trading 4, 3. In the last couple of days, by the way, I bumped up one of the Apex up to 3 micros just because I was getting so much buffer that it was long overdue. But compared to the buffer, I'm still trading very small in all these accounts. But you guys can see, you don't have to trade big, to do reasonably well. In fact, I think you should trade smaller. Plenty of money to be made in micros. So, I gotta tell you, the biggest range bar that we've seen here so far today has not even, oh goodness. Oh man, has not even been 50 points. I hope this is not representative of what we get here today. Hopefully this picks up a little bit. Again, anywhere between 25 and 70 points as far as a range is cool with me, but off the open, I usually expect those to be outside of that range before things calm down. So if this is the open and things calm down into like a 10 ATR, that's not ideal for us, but hopefully they'll just clean up and volatility will stick around. We'll make some kind of breakout move somewhere. Or big trend move, I should say. Big channel move, I should say. And see what we get. Now, as far as market inertia, which is very helpful, you can see bottom of your screen, that's going to be the daily chart. This is a channel-driven market. Obviously we've gotten a few gaps here and there, but that's just showing the New York session, which is what we're concerned with right now. And to be betting huge on big giant range breakouts like, oh man, I'm going to buy this breakout, we're going to run 600 points. It's just not very probable right now. I mean, the market tends to do what it has been doing until it sees a change. Betting on that change happening like today, right now, while you're in the trade, in my experience, is not a great call. Stay dumb, right? Follow the market inertia. Now, what I mean by that is, what has it been doing as far as range? Now, you should be able to label each day coming in. Okay, do I expect a higher probability of a trend day today, or do I expect a higher probability, which is more often the case, of a range day? In which case, maybe priority number one should be looking for little scalps within ranges. And if the range ends up being really tight, meaning the ATR like up top here, that ends up being, 20, 45 minutes from now, 15, 45 minutes from now, then maybe I'll lean into more negative reward to risk stuff and just try to keep a relatively high win rate. I think that's the biggest mistake a lot of people make, is they bet big on huge breakouts every day when most of the time the market's going to be channel driven. We can be moving upside, we can be moving downside or going sideways, but you can still have those channel driven sessions, even if you're moving upside a few percent, where you shouldn't necessarily be betting on some huge breakout, and most people just do because they want the big winner, right? They're passing up the dimes, looking for the dollar that isn't going to come until the market shifts, so to speak. All right, so we are coming in here to 840 territory. And we will see what we get. $18,900, that's going to be a tier 3 level. Not too concerned with it. 19,000 though is a tier 1 level, so we'll see if we get a test of that. It's still 100 points away. Now, in my experience, guys, probabilities, which I think you'll probably find this helpful, maybe not for putting something on, but helpful in general. Probabilities, and this seems to be agreed upon pretty much across the board. The probability of this upside move, like you look at this 5-minute chart, into the open continuing, when there's not really a lot of direct news that's going to push this thing, the probability of this continuing is pretty much 50-50. A lot of people think it's like 70-30. I've never found that to be the case. And that's where you get the stereotype of like, you get this bump off the open and then it dumps off all day. And that's like the big joke, right? Oh, you top ticked it, you bought the top and then it dumped all day. Like, what just happened? Well, that's because this is really like 50-50 in my experience. I mean, there's really not a whole hell of a lot pushing it. We're just seeing kind of low volatility movement right now. And even when it's higher volatility, I mean, the probabilities remain more or less the same, give or take a percent or two. So I'm always looking for, 55 to 60%, which you have to adjust this probability of trade success based on your reward to risk. But to keep the numbers simple, let's leave the reward to risk at 1-to-1 just for the sake of explaining probability. You're not going to get at least, maybe you get it once every 5 years, fine, where you get a 1-to-1 reward to risk opportunity that has like an 80% probability of success. On any given, that doesn't matter though, because to make money, you have to take more trades, right? We're in the business of finding a little edge and then scaling up the sample size. That's what the whole business is. So, the best it's gonna get, assuming a 1-to-1 on any random day, is about 55 to 60% probability. But guess what? That is a tremendous statistical edge. That's huge. Huge. Now, at any given time, it's like a sliding scale, right? Like, obviously there's no official numbers on this because that's why there's a market. There has to be someone on the other side to sell you what you're buying. But most of the time, the futures market is going to be between 52.48 and 48.52. Much closer to 50-50 than most people think. There's two sides. And then all we're doing, again, assuming 1-to-1 reward to risk, all we're doing is trying to find those little slots where, hey, for this, 5 seconds or 3 seconds or 1 second, This entry is 55.45 or 60.40. Nice, right? That's it. So when you lose, you really shouldn't feel too bad about that realistically, because it's not like you're taking a loss on a 98 probability of success. You know, if you take a 60-40 setup with 1-to-1 reward to risk and you happen to lose, that's going to happen all the time. That's still a damn good trade that you put on, and you should be very proud that you even recognized that to begin with. So, I don't know, maybe that'll make some of you feel worse, but my hope is that that helps some of you guys accept and not care as much about losing, in addition to trading smaller. Those two things together, understanding those two things together, and actually putting into practice trading small, I really think, and the market inertia thing, I think that's going to be kind of like your hack to level up. You know, Chris, I think I kind of just answered that. I would probably say the same thing. Now, emotional problems, psychological issues are huge, but I would argue that the psychological issues come from not understanding all three things that I just said. You know, one of which being they trade too big for their experience level. The reality is, you guys have probably experienced this, but have you ever sized way down? And let's say for futures, you're like, okay, I'm on a red streak. I'm going to show up today, but I'm just going to trade 1 micro. I've seen this time and time again, and you trade 1 micro and you're like, I can't make any money. And all of a sudden you look up and you've made a decent amount of money, and you're like, oh shit, you multiply that by a whole bunch of funded accounts. I actually had a pretty damn good day, way more than I can make it a job here today. Trading 1 micro per account, it adds up, is my point. Now, you don't have to trade just one. You can trade multiple micros. You can trade a mini, a few minis. It all just depends on how much buffer room you have in the accounts, which is a completely different conversation. Again, I prefer to try to scale horizontally, not vertically. I think scaling vertically is, I would argue, foolish for a lot of reasons, at least with prop trading. All right, so we're seeing this little melt upside. You see that the top right of your screen, that 2-minute chart? You see those bull bars are kind of shrinking. Now the bulls are attempting to get a little bit of a growing bull bar. We're into 845 territory here, so we can really start looking for little setups here. Now, I understand the one thing holding me off from looking really and getting excited about continuation here is the fact that I know we're in a range-bound market. And this range has already, at least the body of this bar, has already kind of expanded to the body of what we saw yesterday. So, we'll see how this develops. Chris, I've said this before, my win percentage is legit better with a smaller size. I think it's because seeing the drawdown is harder to sit through when I size up and I don't let the trades play out, yes. Yes, I think that's clearly the problem. In theory, you should have the exact same stats with any size. In theory. In reality, that's not even close to true. It's very different. You know, when you're not yet desensitized enough to the numbers you're seeing, it's a different ballgame. The idea is find a little bit of edge, exploit it, trade that size until you can do it in your sleep. And you're just completely at rest when you see those numbers going up and down. And then over time, you try to get those base hits just bigger. Desensitize yourself early. I've said this forever. I think one of the best things you can do is in life, maybe ironically, is one of the best mistakes, I should say, you could make in life is maybe losing a lot of money really young. A lot of money really young. Whether that comes in the form of a big lump sum loss or a lot of paper cuts, whatever. Doesn't have to be in trading. It can be really in any venture. To the point where like it's scary, and your head's spinning because it's so much money to you, and that desensitizes you. If you can get desensitized like that in your 20s, 30s, even 40s, oh man, that's like a superpower. Because most people never really get super desensitized to those numbers. And if your goal is to make a lot of money, or even like a massive amount, you're gonna have to be desensitized because you're gonna take big losses and you're gonna have to be able to stomach the big wins, which a lot of people don't think about. So I think we're all kind of always working on getting desensitized more and more. It takes time though. It doesn't happen. For sure, that desensitization, is that the right word? Does not happen overnight. John, are you not too concerned about the intraday drawdown in your Take Profit Pro accounts? No. With the size I'm trading, I have done the math many times, and I am fine. Now, inevitably, with funded accounts, this is just the way it goes. I don't care how wonderful of a trader you are, inevitably, eventually, you should end up having to cycle through more accounts. Because eventually, if you're trading size where you're maxing out the bell curve of prop firm profitability, you're eventually going to hit some crazy outsized statistical anomaly losing streak and probably lose the accounts and then have to start fresh with new ones. That's why I say when you build out your business plan, that right there is number 2. How long on average do you want to hold the accounts? That right there determines how big you trade. Yeah, I'm going to stick with 40-40 here today for now because, you know, that ATR is above. It's at about 30 right now, 29. I've been paper trading for 6 months and I'm getting better each month. My mentor told me it's good if I start live trading soon, just with $1,000 and trade small to get used to trading with real money. I don't think anyone can answer this without actually knowing anyone's actual situation, but my argument, you know, not knowing anyone's situation, my argument has always been trade in the simulator until you understand the charts, the buttons, you know what setups you're looking for, you have your hotkeys set, you're fluid, you know what you're doing, okay? Then, I think the best level up, the biggest jump you can make is trade with literally the tiniest, smallest amount of money you possibly can for the market you're trading. Now, that's a little bit different. If you're trading stocks, you gotta be over PDT, which kind of sucks. So you're gonna wanna have probably at least 30,000 in the account and then just trade 1 share, 2 shares until you're consistently profitable. The real money, even with just 1 or 2 shares, changes your psychology. Now in the futures market, you can trade 1 micro. Okay, you have 0 reason to trade any more than 1 micro if you're not like consistently profitable with an element of real money there. What happens to a lot of people is they trade in the simulator for a year and a half, and then they're like, okay, I'm ready. And they fund an account with 100,000. And they lose it all because they never learn the psychology. They can't handle the drawdown because it's always been fake. Use the sim to understand what you're looking at, what you're looking for, and how you're connected to the platform through your keyboard. That's it. Then take it real, as small as possible, so that you learn the lesson for almost no cost. I mean, that's clearly the smart way to do it, because you know, you learn everything for as cheap as possible, then you scale up and profit much bigger as you scale. Here's the test of 19,000. Again, that is going to be a tier 1 level. Now again, I'm still watching this because I know that, you know, market's range bound. Can't just completely forget about inertia. All right, so I do have my eye here on this little continuation setup. The bulls keep taking this higher. The bull bars are not at least as of right now, shrinking to a high degree, though this bar needs to absolutely clean up for me to be interested. However, I would be if this bar could clean up. Okay, meaning closing at pretty much at its high. All right, getting a little bear wick back. Gotta hold off. Too much of a wick on the close of that 2 minute. Gotta be careful with those wicks in a range-bound market like we're seeing. Would I give it a little bit more leeway in a trend market? Maybe not that much, but yes, a little bit more. But in a range market, the setup needs to be clean. I mean, otherwise it's just a rule break. Not interested in rule breaks. Nico, what are your parameters with ATR and how many points you're looking to risk reward? Yeah, so 25 to 70 is my sweet spot for what I've been running lately, which is 40-40. Anything below that, I will go, well, I should say within reason, maybe 10 or 12 up to 25. I'll still kind of go in with the same risk reward, but I'm looking to lean more into negative reward to risk setups at that point. Anything below that, you really have to tighten up and maybe size up. But if the setup quality goes down, then maybe it's just time to walk away. Yeah, Zachary, unfortunately, most people, almost nobody actually goes down the, like, correct, best, most optimized trading path. And I get it. I mean, I get it. I've been the same way. I was the same way. I had to get cut a lot deep to learn the lesson. I don't know, maybe that's just my personality type, but I think that's a lot of people who get into trading maybe share similar traits in that regard. Maybe you just got to learn it for yourself. Maybe that's why we all make the same mistakes, because we're all, at least in this regard, as far as aspirations, motivations, similar. Maybe that's why we all make the same mistakes, and no one seems to listen when somebody who's been there tells them something. That's okay. Morning, Keith. What's up? Welcome back. How you doing? All right, so the high of yesterday's New York session, what was it? 19,165.50. Plenty of room. Nice little reset bull bar. 55 seconds out from the close of this 2-minute bar. This is an outsized bar compared to the recent volatility. I mean, it's sad to say that maybe a 35-point bar is outsized, but that's the reality here. Yep, we got existing home sales here. Top of the hour, 9 o'clock. Be aware of that. Volatility on that should be short-lived. All right, now the rollover of this next bar is going to take us right into news and the top of the hour. So even if it's a clean setup, I'm going to have to hold off on that, which kind of sucks. But that's okay. A 2-minute bar should be enough for the home sales data volatility to kind of clear. Then we can get down to business here. Nico, do stop hunt trades into levels have a higher probability the higher the grade of the level, or do you judge the probability off of recent price action only? Let me think about what you're saying here. Does probability increase based on a higher like grade or tier level of the level? So for stop hunt trades, the way that I think about this, Chris, is the probability increases the more reason I have to believe that there's more stops in the area. So if there's like a very clear bottoming wick that put itself in after the opening bell, and maybe we got a bull continuation setup coming out of that bottom and we moved higher and now we're fading back down and I'm looking for a continuation short through that level, guess what? I know that a whole hell of a lot of bulls bought that setup. I mean, it shows right on the candles that they did. And guess where they put their stop? The only obvious place, right below that level. So that becomes a much higher probability of a bigger move, you know, maybe 15, 20, 25 points in a decent volatility market just based on the stop losses alone. But if we're looking at like, you know, not even the high of pre-market level, and it's kind of a top wick, but it's not even the pre-market high, and it occurred in pre-market, and now we're after the bell, probability there is nowhere near as high. It's just not as relevant. Eric, take profit trader makes you hold off due to news, right? No, not this news. Everyone thinks that you can't trade any news at all with take profit. That would be a little bit ridiculous because there's a lot of news throughout the day and it would just be rule breaks left and right. They email you. It's big news events like CPI. They email you whenever you can't trade something. And they do it ahead of time. All right, so existing home sales came in at 4.02 million compared to 4.13 million as the forecast. So now we have a minute and 10 out from the rollover of this 2-minute bar, and I am watching the close here. See if we can get a nice little continuation setup. We still have room before the high of yesterday's New York session, which was 19,165.50. So nice clean close at the high. Gotta put that on. "30 seconds out." Josh, do you ever trade those micro pullbacks? You know what? For me, it's not like those are like A+ setups. They don't compare to like a continuation or a channel scalp. But in an eval, I'll trade a micro pullback to the high of the previous bar, 100%. Absolutely. Or if for whatever reason you're trying to trade much more aggressively, 100%. All right, here we go. Let's see if we get a nice close at the high. Close to the high, so I will put that on. I will buy that, and I'm now sitting long on the rollover of that 2-minute bar. Let's see if we end up top ticking that. That's a good setup for me, so I got to put that on and see how it plays out. So average price there, 19,075 3/4. Stop loss down at 19,035 3/4, and take profit up at 19,115 3/4. Currently sitting a couple points in the red here. We'll see how this works out. It's in about 10 points, well, 7 points in the red here. Kind of pulling back to the wick top of that previous 5-minute bar. Volatility, you know, it's a little bit down, so I don't expect these trades to, on average today, be super fast. But we'll see how these work out here. All right, about 13 points in the red. Bears trying to take this lower here. Again, stop down at 19,035.75. We'll see if the Bears, again, that 19,050, that's a tier 4 level. I don't care too much about that level. Turning this 5-minute wick into a bit of a doji here. And 10 seconds left on this 2-minute bar. See if the Bulls can push this back up out of the hole. And take it higher. So again, take profit up at 115 3/4. The high of yesterday's New York session was 19,165.50. So we're cool there. We're clear. Back to break even here on the trade. All right, we're about 10 points in the money here now. That 19,100, that's a tier 3 level. Not too worried about it, at least on its own. There's the rollover of the 2-minute bar. Now let's see if we can take this bar and get a nice push out of the Bulls. $15 points in the green. Trade's probably going to take its time a little bit, and that's okay. That's okay. Not in a big hurry here. Though if something changes, I'm of course open to managing the trade. But nothing has changed here, so. A little bit in the money. Old school, does high of day make this slightly more risky? This is a buy high, sell higher strategy. Continuation, right? I think people are scared of high of day, low of day. People have always been told, don't buy the high of day. You know, I short that. I short the high of day. Well, if you're going higher, then every move higher is a high of day. You know, especially in a trending market, which we are not in, by the way. Admittedly so. We're not in a trending market. This is a channel-driven market. I'm just doing what the market's telling me. But, you know, sometimes in a move like this, you just got to put on what's the good trade. For me, here, the good trade is continuation, regardless of outcome. All right, here's 19-1. Tier 3 level, not concerned with it. 24 points in the money. Yeah, looks like some of you guys took a similar trade and are already out. I gotta let it sit. I can't manage early. For me, that would be, I think that would just be an emotional call here. There's really no reason. 19-1 is a tier 3 level. And, you know, it's easy to fall victim to that fear of, like, well, I'm in the green, it's on the table, I could just take it now and avoid loss. But remember what we talked about a few streams ago? That's that feeling of putting on risk and avoiding it. Avoiding loss. Not really here to avoid, ideally avoid loss. I don't like losing. But I'm here to keep my data in statistical edge territory. So. Alright, the Bears are, admittedly so, now attempting to trigger a little bit of a reversal sequence. And here we are, pulling back a little bit. Still, you know, 8 points, 9 points, 10 points in the green. We'll see if they can do that. All right, break even on the trade. A little bit in the red here now. We got close. We got to about 30 points in the green. So let's see if we can get a push back up toward 19-115, or if the Bears end up succeeding on this reversal sequence. All right, 15 points. Well, really 10 points in the red here. Widening out a little bit. Potentially forming a little channel here. All right, about 20 points here in the red. Again, stop is at 19.3575. So we'll see if the Bears end up taking this lower. Or if the Bulls can step in and fix this guy for me. Again, we were 30 points in the money at best, but that wasn't target. Target was 40. Back to break even on the trade. A little in the green, actually. Happy to hear it, TC. What's up, Jet? How you doing? Welcome back. Well, we're a few points in the money here. See if these bulls can step in and shut those bears down. This trade, again, taking its time. Volatility today is low, so I'm cool with it. Gail, what's up? How you doing? Happy to hear it. Get it done. What's up, Sean? Good work. Up 1.3K. Well, bears are not really letting up here. You know, still, I have no reason to manage early. There's just nothing. I put the trade on for a reason, so accept the outcome. Sometimes what you got to do is this. Nothing. Well, back to break even here on the trade. Again, volatility's down. This trade, it's going to take its time here. Again, that's okay. It's part of the plan. Yeah, Chris, how about maybe not right now, huh? Let my trade work itself out, and then Trump can do some posting. Shake things up a bit, huh? All right, we're 10, well, 15, 16 points in the green. Again, 19-1, that's a tier 3 level. I'm not concerned with it on its own. 20 points in the money, target at 19-115-75. See if the Bulls can hit it. Show a little backbone here. All right, here's the test of 19-1. Tempted to break out. Okay. Oh, you gotta be kidding me. Look at this. Got missed by 1 tick. See if we can hit that out. At least based on the data coming through NinjaTrader, which, you know, sometimes it's like, who knows? All right, 30 points in the money. See if we can get one more little push. That's funny. Need about 8 more points. Bull's kind of struggling to get it up toward my target, huh? Yeah, so the data's showing a little bit different from NinjaTrader to Thinkorswim. But some of you guys said you got taken out in the low 115s. Mine's at 115 3/4. So the market must have gone there if you guys got hit out. All right, give me 10 more points, 8 more points. There we go. And we are out there. And we're flat. All right, nice little winner. That was kind of all over the place. We went 30 points in the money. We went, I mean, damn near 30 points in the red. A couple of times. So that's where we sit. We're up 21-30 so far. So we didn't get like fantastic fills, but that's a decent trade. Not too bad. So let's see what else we can find here. It always seems to happen. You get hit out, it's teasing your level. Totally a fallacy, I understand that, but it teases your level, it hits you out, and then boom, it runs like another 10 points. Yeah, Panther, I think the move upside was more just based on price action. The home sales, that volatility was over within 30 seconds. Yeah, so I have my eye on continuation again. However, like we talked about, the high of yesterday, the New York session high yesterday is 19,165.50. And normally I wouldn't put too much weight on that, but with volatility being a little bit calmer today as it is, I do think we're going to see a little bit of hesitation, at least out of the bulls coming to that level. And if we were to get a nice continuation set up here, which we didn't get just there, maybe I get an entry, I don't know, 140? I mean, we're 20 points away from the high of yesterday, so I got to watch this kind of develop. Plus, I think that as you get upside moves, we talk about this all the time, you get these clean upside trend moves, and then you start to, boom, widen out a little bit. Oftentimes, that turns into a channel until it rolls over. Right? So, I don't know. That's kind of what I'm thinking here right now, what I'm watching. We can get a nice channel developing, then boom, I'll start taking little channel scalps. What's up, Debo? Welcome. You're late today, brother. What are you doing? Is a 58% win rate on futures okay, or is that not so good? Okay, so that is entirely dependent on what is your reward to risk. If you have a 58% win rate, but your reward to risk is 2 to 1, that is fantastic. That's insanity. That's a crazy, crazy edge. Are you, in order, Productions, to answer your question, are you running 1 to 1? 1.5 to 1, is that reward to risk or risk reward? Which one is the reward? Kings, I admire your patience to wait for your TP to get hit instead of closing early with it struggling. I need to get there. I would have took it. I would have took what I could get when it hesitated. Good for you. Yeah, listen, I think you guys see, sometimes I'll manage early. But that's if volatility is well below 25, meaning the ATR, like up top here, that blue flag at the bottom. If that starts dipping below 25, especially below 20, I have to lean more into negative reward to risk. But when it's within my range of like 25 to 70, and nothing has changed in terms of price action, like we don't get some really obvious bear continuation setup when I'm sitting long, I just have to leave it. And I wish there was like some hack that I could tell you guys, like, here's how you here's how you leave the trade on. The reality is, the longer you do this, and the more confidence you have that hey, you know what? I do have an edge. I actually am a good trader. I can do this. When that confidence hits and it's off to the races, you kind of just stop caring. And I know that sounds crazy, but like, this isn't like an act or like some hack that I did and now I can just stay calm in trades. The reality is I just take good trades, and for me, what's a good trade for me? Might not be a good trade for you, but for me, I put it on. I want to make money, but this one trade is meaningless. I just don't really care if it makes money or if it loses, because I know that over time it'll just work out. If I just take good trades. Now, if you stop taking good trades, that's a problem, obviously. But get to that point, trade a size and trade setups where you can just kind of stop caring. And I think your performance and your confidence, which also helps your performance, will go through the roof. Debo, sick as a dog, but I'm here. Well, push through, brother. Jim, good morning from Nashville. What's up? How you doing? Chris, adding to that, following Nico's rule of having a large sample size and historical data really helped me with that as well. The more data, the calmer I've gotten. Listen, the more undeniable evidence that you can show yourself that you're a good, profitable, consistent trader, the less you will care, the more confidence you'll have, and the less of a roller coaster your trading days will be, which inevitably just makes you make more money and perform better. Okay, so if you guys are like, I'm really struggling with, you know, I'm taking things early when I know I'm not supposed to be, and I'm struggling holding trades when they're in the red, and like I'm shaking while I'm in the trade. Okay, size way down, figure out what setups you want to focus on, just build out data, and then sit down, stare at the data, look at the result, and realize, holy shit, I took 3 losers in a row, but I still made this amount at the end of the week. The more you can do that for yourself, which comes from trading small and having a lot of data, it's just going to skyrocket everything. Confidence, probably profit, and it'll tone down the roller coaster that causes issues and makes this not very enjoyable. Because listen, I've been there, like, sitting in front of the screen in a trade, and like you can't even control your emotion. You're just like, you're like damn near shaking. Like, that's not fun. It's taxing. It leaves you exhausted when you leave the trade, and like it's like you're not even making any money. Size down, get data. Focus on getting confidence as a trader, because the confidence is everything. Once you know, it's like, okay, the longer I do this, it's just the more money I make. I sit down, I put on good setups, and boom, that's my job today. If I win, if I lose this one trade, it just doesn't matter. How do you know it doesn't matter? Well, I look at my data and I see it's never mattered. Losing 2 in a row, 3 in a row, 8 in a row. You know, once a year or whatever, I lose like 8 trades in a row, whatever. Doesn't matter. Peter, what kills my confidence is my tendency to hold losers longer than winners. Then you gotta set some more robotic rules. Have your robotic rules set. For me, for example, that would be like the 40-40. And when I enter, however, the entries, there's a slight discretionary call involved, which you guys see. And then the discretionary call as far as management comes in more so if, hey, is there a really obvious setup that I would enter that's actually going against my current trade? Like if I'm long and we get a bear continuation setup that hasn't stopped me out yet that I would get short on, it's probably time to manage early, right? Or if ATR falls off a cliff and it's 12 and I'm in a trade, maybe it's time to manage early because I'm betting on an outsized move now, which I don't like doing. Still watching though for setups here. Nothing really clean yet. You guys see we're seeing some more bear bars get mixed in. And we are still coming into that yesterday's New York session high. So that's what I'm paying attention to. Exposed. My journaling has gotten better to keep up with time, price range, and levels to match into level 2 info, building context on the chart and master your process. If you're struggling, you don't have to journal forever. Not going to pretend like, you know, I sit here and write out my trades for 3 hours a day. I have done that. I don't anymore, but I certainly keep up with my data. Always. It's too easy to not do it. Alright guys, I'll be back in a few minutes while this works itself out. Don't go anywhere. Look at this move, huh? Come back and sit down and that happens. I mean, like we talked about, right? Not that long ago. It looks like we're widening out into a channel. So we'll see if that's what we get. I just got on, but looking at the chart, I'm guessing Nico took a long continuation trade around 18,955. Am I right? What was my entry? Let me look. I think it was... Which bar was it? I think it was this bar. Yeah, it was this bar. Eric, Quicksilver must have just entered the market. Yeah, for those of you guys who don't know, Quicksilver, I don't know if he's here today. He always pops in the chat, and like every day for the last 2 weeks, he says he gets short, and then he makes like 1,000 points. John, green over here today, boys. Made 2 days pay in 1 hour back to work. Good work. Good work. We're testing the 2-minute 20 EMA. Let's see if the bulls can hold that up. Obviously, the 5-minute 20 EMA is going to hold more water just because it's more psychologically relevant. More people are watching it. Goal is to quit the 9 to 5 once consistently profitable. Personal funded account. No props. Good plan. Good plan. Just get the data looking good. Make sure you can cover yourself on the down months. Pull the trigger. Honestly, I think a lot of people, they I don't know, it depends on your situation. Obviously, if you're a little bit older and you have a family and a mortgage and all these things, like, you got to be sure. But a lot of younger people, I think, honestly, they wait a little too long. And they're a little too scared, I think, to pull the trigger of just going full-time when they can show consistent profitability. Obviously, you want to be in a good position. You want to be sure. But how sure is sure? I mean, right? If you're showing good results, the reality is, if you could have 8 hours a day back to work on your setups and your trading, is there a reasonable expectation you can at least maintain those results? I would argue the answer is yes. Now, obviously, you're going to have some down weeks, maybe a few down months here and there. But I don't think you can expect to pull ahead too much if you're not willing to put on the risk that other people aren't willing to put on. Trump making some comments here. Mostly about Boeing. Talking about fentanyl. Careful, we'll see if he makes a tariff call. All right, trying to break downside through that 20 EMA on the 2-minute. You can see here that 20 EMA on the 5-minute, again, more psychologically relevant, sitting at about 19,031. BC, Nico, do you remember when you started? What was the first consistent setup that you had confidence in? Well, realistically, the method that allowed me to do this full time and cover everything we needed was actually, believe it or not, net short option strategies. So less of like a price action setup and more of a implied volatility price level expiration strategic putting it on, right? I mean, like it was spreads and really running the wheel, but with not that much money. And believe it or not, that was what did it for me. I'm still a huge fan of running those, by the way, but it doesn't take any time. It takes 5 minutes a day. Now, as far as price action trading, one of my first setups that I really, really liked was one that I ran for a long, long time. And it was essentially a 2 plus or minus 2 standard deviation from the volume weighted average price on highly liquid ETFs, and you would get like 2 to 3 clean bounces, and then I would take the third and or the fourth, and that performed very well for me actually. But now I'm more of a fluid, just price action trader. Peter, $100 from passing a 50K again, scaling way down. Yeah, when you get that close, scale it back, scale it way down, and just bunt your way to the finish line. That's the way to do it. If you guys haven't yet, please hit like on my stream. Helps out a lot. John, appreciate it, brother. So ATR, you know, believe it or not, when we saw the open, you guys, I was a little concerned off the opening bell that ATR was gonna kind of dump off on us because we were seeing like 30, 40 point ranges right off the open, which is very, very low for the open. But ATR is actually holding up. It's at 28, 29 right now, so that's good. That's good. It's holding up for us, letting us actually do some real trading. Again, my ideal range is really on the ATR like 25 to 70. If I really had to nail that down, I'd probably say maybe 25 to 60. 70 starts to get a little crazy, but we're low in the range, but we're within it. Debo, I'm still building confidence in the continuation setup. Would the bull bar close at 18,955 not have been a good entry? Well, let's take a look. 18,955 here. We talked about this one. Now, the reason that I didn't, well, first of all, we got a little bit of a pullback, and I think, oh, that was the 842 bar. I held off on that because we had news at, was it 845? No, because I was waiting till 845 to let the institutional orders clear. And if we looked at the market inertia, which we did right around that time, actually, we're range bound. Okay, so to take a bet before 8:45 for me when institutional orders are still clearing on a big outsized move. Now we ended up getting it, which is why I took a trade later when we had more information. But at the time, for me, is it a reasonable buy? Yeah, I wouldn't yell at you for taking it. But for me, there were a few reasons. NZ, just passed my first Apex eval. Was quite a ride today just from being silly, trying to pass in one trade. Made it way harder than it had to be. Good work. What size account you get? Yeah, I mean, listen, there's a balance. Obviously, I think the deeper you get into this, the less time you're going to want to spend because there's opportunity cost. Passing evals, so the more aggressive you tend to trade them. That's going to make your expenses creep up a little bit. So in the early days, it makes sense to take your time in the evals. But like, just being straight up with you guys, I wouldn't spend, a month and a half in the eval. They're just too inexpensive compared to the ceiling here. $50K. Cool. It's a great account. It's a great account. Trade small, just remain consistent, put on good setups. And you could be in payout territory in no time. JM, the blue line, that's the 20 exponential moving average. I just throw that up on the 2-minute and the 5-minute for context. I do not make trades based on it and it alone, but I do use it as a supporting factor in already clean setups. The longer you guys go, the less indicators you're going to use. It's just going to be the way it is. But like, I don't know, sometimes it's like, I gotta have some up. Otherwise, I feel like I'm kind of swimming naked, like I don't have any context. So I throw up the 20. Seems to be like a good balance. Sometimes, hey, if I'm like really quickly scalping, like in an eval or something, sometimes I'll throw up the 10, but honestly, lately I've been just kind of sticking with the 20. Apex 50K funded accounts. How many micros do you typically trade? 2 to 3. So I will, with a 50K account, usually I just start with 3. Yeah. And then from there, it depends on your business model. Are you somebody who wants to build out the buffer and really, really scale? I'm more of the mindset that, like, I don't know. Why would you want to do it that way when instead you could just trade 3, maybe push to 4 micros? But honestly, I feel like 3 is plenty. And then when you get to payout territory, which shouldn't take all that long with 3 micros, I mean, it kind of happens before you know it if you're trading decently well. I'm of the thought process that I think people are a little bit crazy when they leave a whole bunch of money in the Apex accounts when you could just take it. And if you really want to trade with that money, just fund a personal account. I mean, I think it's nuts when these people are leaving like thousands, tens of thousands, hundreds of thousands of dollars. That's their money in the hands of another company. That's crazy to me. I don't know why you would do that. Just get it in your bank and then do what you want with it. But I realize that I think the reason a lot of people do that is because they trade so big that they actually end up with a huge buffer in the account, but they actually can't take a payout because they haven't traded for 8 days. They've broken rules. There's no consistency. They haven't followed the consistency rule because they're trading huge and kind of gambling a little bit. And then every once in a while, they end up with a huge profit that they can't actually take. So that's probably why they're not taking payouts yet on that money, even though ideally they would, but they can't because they've broken rules. Kev, I'm 2.5K up on a Top Step 50K live. When should I think of taking a payout? My mindset is I think you should, I don't know, when it's worth the time it takes to request the payout, which is not that long. I think people should probably think about taking it as early as they can, unless your business model is to, again, scale the accounts so that you can trade bigger and bigger and bigger. But I got to be honest with you, it probably makes more sense to just take the money and trade it in a personal account if you want to do it that way. Again, why leave a bunch of your money that you earned in the hands of another company? I don't really see the point of doing so. Unless, of course, and this does come into play, the reason a lot of people do that is because they have their heart set on the Apex payout record for clout on the internet. Hey, if that happens, cool. That's great. But I think the reality is, are you here for internet clout to get that record? Or are you here to provide for your family and earn a great living? Or more than a great living? I don't know. Yeah, Peter, taxes definitely comes into play there. But still, it's like, I think a lot of people, what a lot of people do is they let the accounts grow and they trade bigger and bigger and bigger, and they're really pressing the line. If they lose 2 or 3 trades in a row, they're screwed. But they keep pressing it and getting bigger and bigger and bigger. I mean, why? If you just blow up at the end anyway, what difference did it make? Scale it horizontally. Don't scale it vertically. I keep saying this, but that's really, really what I believe that how prop should be traded. Because most people try to scale vertically, and that's why prop is still in business. All right, volatility coming in now. ATR is at about 26, maybe 27. You can see those candles are getting a little bit smaller here into 10 a.m. territory. We'll see if we can end up putting in a nice little channel here. That's really what I'm watching. Really is a pretty clean day here so far. Been good. Just one trade for me here so far, though. It's really all I've gotten. Now, listen here. If we look at the 5-minute chart, I think it's worth paying attention to. Top left of your screen. Do you guys see how, since the open, we have literally not even touched the 20 EMA? Now, understand that we could push higher and drag the 20 EMA up higher, so don't take it literally as it sounds as we sit right now. However, I would expect with a high probability that the 5-minute is going to test the 20-minute, the 20 EMA at some point here today. I mean, it's only reasonable. It's a pretty low probability day where that doesn't happen. Lee, what's up? Hey, at least you made it, brother. All right, now, this is very early stages. We have 2 touch points on the top and 1 touch point, you could argue maybe 2, on the bottom. However, lower high, now turning over. Those buyers losing steam very quickly. Kind of weak. Right, so we may end up seeing a little descending channel formation here. Again, only 2 touch points and 1, really, maybe you could argue 2, depending on where this goes. But we may end up seeing that there, and that would be a beauty of a setup to short off of a 3+ touch point descending resistance if we can get that setting up. So we'll see how that goes here. So it looks like we may have some new people in here. What's up, guys? How you doing? If you are new, I am live every morning, 8:15 a.m. Central Time, and we're live for over 2.5 hours every single day. So subscribe to the channel if you haven't. Appreciate it. Yeah, bulls are trying to hold that 20 EMA on the 2-minute. Again, it's not incredibly psychologically relevant. It's there for context. The one on the 5-minute is more psychologically relevant. It's more heavily watched. Todd, what is the line with the ATR on the bottom of the screen for Ninja, and how do you use it? Well, are you asking how to put it up? You just want to put up the average true range, and then what I do is it's on a 2-minute chart, so it's based on the 2-minute charts. And then the value I set to 10, so it's 20 minutes. 10 2-minute bars. That's the blue line that you see, and then the vertical bars. That's the range of each individual bar. So all I'm doing is comparing the volatility of the current bar to the average to see, hey, is volatility increasing, decreasing, remaining stagnant? What is volatility on the 2-minute bar? I mean, you could just like do this and say, okay, what's that range? All right, what's this range? But it's just a pain. It's just easier to throw this up. And I wouldn't even really call that an indicator. It's just data. It's just telling me information. It's real. Well, bulls pushing this higher. Let's see if they can get a test into intraday highs. That there would require a break of 19,180. Let's see if they can put that together. Which, by the way, would offer us the opportunity, potentially, if we got some consecutive bull bars, of a continuation sequence here. Now, obviously, yesterday's New York session high was 19,165.50, so we're kind of trying to clear that as well here right now, so we'll see if we can. Vegas, what's the best technique for journaling trades? Well, the cheapest and a good way to do it, and I've done all of these, is you buy a cheap notepad, you get a pen, and you write the time, you write your entry, your stop, your target. You write the result of the trade and why you entered. Maybe you add, okay, emotionally, how did I feel on a scale of 1 to 10 during this trade? And if you consistently find yourself at a 6 or a 7, or maybe a 5 or an 8, time to size down a little bit. Do it that way. The easiest way, though it costs some money, is just a service like TraderView. It's great, but you still have to import them, and there's a fee every month. So whatever's better for you. You see we're sticking right here around 65, which is yesterday's New York session high, which is kind of why, right? I mean, I didn't want to take continuation right into that, even though we did kind of get a setup. Like this setup here, a beauty of a continuation, but we're pressing now that high from yesterday, and then we get that pullback. The bears step in and say, wait, hold up. What about yesterday's high? And they pull it on back. And you know what? Even if it's just a few percent increased probability that this occurs, you're only getting a few percent edge on any really given trade in the futures market, which is plenty of edge, by the way. What's up, Pumple? You're late. Yes, we took one trade. This is how we sit currently. Trade took its time. Volatility is a little bit lower today, but it's actually maintaining better than it has in days past compared to what we saw as far as volatility on the open. So one trade, just one here so far today, and we're sitting up $2,130 so far, seeing what else we can grab. CS, I need to sign up for this Apex deal. I need to get all of the tools. Yes, if you guys don't know, you've been living under a rock. Apex, this ends today. It's 90% off, single day pass. Use code BIG. That right there is the best it gets as far as deals with Apex. Yeah, I'll be adding to the roster. The more accounts you get, the more issues you're going to have with the copy trader. But yes, we'll be adding. Really kind of struggling around that intraday high, which again also happens to be within 5 or 10 points of yesterday's New York session high. So see if we can get a nice push through. And then we're looking for continuation. Also worth mentioning, maybe a bit of a flat top forming here. That's why I traded 27 contracts on that paper trade, yes, to simulate your 27 in a past video. Yep, it's just the sum of the size and all the accounts, which obviously will change. All right, here we are testing the high of day. Bulls are kind of struggling, but let's see if they can get a breakout attempt. You know, again, on that 5-minute chart, I do expect with pretty high probability, just based on probabilities, that we're going to see eventually today a test of the 20 EMA if it comes in the afternoon, whatever. But to have a whole day where we don't test the 20 EMA at all on the 5-minute chart is pretty... that doesn't happen that often. Pumple, would you mind explaining your reasoning of why you prefer horizontal scaling? Isn't it a pain having to deal with copy trader and all the issues that come with it? Yeah, it's a pain, 100%. But it's more of a pain where if you lose 2 trades in a row, you just lose the funded account, because losing 2 trades in a row is highly probable. It's going to happen. So if scaling vertically is just unsustainable and is the reason why prop firms, there's so many of them, and why they stay in business, then maybe the better alternative, right, is to scale horizontally, make just as much, actually probably more money, because it's a more sustainable model to scale horizontally. Yes, the expenses are higher because you have to pay for more accounts. Yes, you have to get a copy trader. Yes, copy traders aren't perfect, but those are much better issues to have to deal with than just the unsustainable model of scaling vertically, which is what everybody likes to do, because they're like, I'll just buy one account and make a ton of money in one account. And you end up trading too big. I mean, the drawdown is the main issue, right? And if you're trading multiple minis in a 50K Apex account with a $2,500 trailing drawdown, you lose 1, 2, maybe 3 trades in a row, the account's gone. And that's highly likely to happen, even in just the first few days of trading. So to me, scaling it horizontally is really the only way to trade prop. I mean, it's not the only way, right? But it's, in my opinion, by far the best way. At least if you're serious about trading. If you're treating prop like a game, then have at it. But I think if you're watching, if you're here, I think you're probably kind of serious. Or very serious. All right, 19.2. It's a tier 3 level. I'm not too concerned with it. I'm really more thinking about that high. See if we can get a nice push into the high. Gains. This is the copier from Affordable Indicators. I do not have an affiliation with them. Well, Tradeovate just got back to me and said that I need to talk to Take Profit Trader, which I already did, and they told me, he sent me reports that showed that the balances were incorrect, and somehow thought that that was proof that it wasn't incorrect. So I gotta try to get a different rep here who actually knows what I'm talking about. Kings, excuse my ignorance, I trade personal. What's scaling horizontally versus vertically? Horizontally is trading relatively small in a bunch of different prop accounts. Scaling vertically is getting like one prop account and trying to trade huge in the one account. Let's see if we can get a nice little continuation setup going here. Bruce, can you explain what different tier levels mean to you? Yeah, so S tier, 20K, 15K, 25K, stuff like that. Tier 1, 19,000, 21,000, 22,000. Tier 3, 19.5, 18.5, 25, 21,500, like that. Tier 3, 19.2, 19.1, 18.9, right? And Tier 4, 19.250, 19.350, 20,050, like that. All right, we're trading sideways here at 19.2. I think this is more about the bears stepping in, balancing out the buying pressure. That's probably weaning off a little bit here as we push into the highs on what is, again, kind of a range day. We've now kind of matched, if you look, daily chart, bottom of your screen, we've kind of matched the range of yesterday and the range of most of the last couple of weeks, by the way. So that's kind of what we're seeing. Bank of England says tariffs will have a negative effect on growth. It's not going to cause too much volatility. Yeah, hi. Think you have less exposure per account with the same drawdown per account. So you have 10 times less exposure, which means you need to lose more trades in a row to lose the account. Scaling horizontally makes it, in my opinion, much more sustainable. And, in my opinion, you end up, inevitably, if you have an edge, you're going to make a lot more money more consistently. Are the expenses a little higher? Yeah. But that's the prop game. And you have to understand, from the prop perspective, what are they betting on? They're betting on you buying one account and blowing it over and over and over again because you're trading way too big. Or doing that with 20 accounts, right? And trading way too big in 20 accounts, thinking you're gonna, make 2 million overnight, rather than just hitting big base hits and then trying to get the base hits as big as possible. Yeah, this is a good question, actually. Have you ever been worried that you haven't lost in a long time and you think it's about time I lose? That is what's called a gambler's fallacy. So, I lost a trade yesterday to start the day. And I don't care. They're gonna come. You're gonna have times where you lose a bunch of trades in a row and times where you win a bunch of trades in a row. Thinking I'm due for a win or I'm due for a loss is a complete fallacy, and I think everyone needs to kind of let go of that. These stats, if you have edge, will work themselves out with sample size. Just do your job to make sure you don't fuck up the stats. Put on good trades only, and manage them how your plan tells you you should be managing them. Whether that's you manage early in certain conditions or you don't manage them at all. That's your job. And then let the math work itself out. Don't worry about streaks in either direction. Just let it play out. All right, we may see a little channel form here, now turning into kind of an ascending channel. You guys see those touch points there? Hi. I'm tempting to max out accounts with code BIG. What a deal. Why should I not do it? Any downside? If I blow up the account, I will only lose 20 to 30 per account, right? If you fail the evals, you don't lose the money in the eval. You just lose what you paid for the evals per account. Now, if you get funded accounts and you pay the activation fee and then you blow all those, then yeah, you lose the eval payment and you lose the activation fee. But, I mean, if you go in the eval of like a 50K account, with 90% off, where it's like $17 or $16, and you take one trade and you lose, the full drawdown in 2 seconds, you don't lose 2,500 bucks. You lose what you paid for the eval. Which, in part, is the beauty of prop, not only for experienced traders, but also for people looking to learn. The downside is just so minimal. That doesn't mean you should just trade huge and blow it, like, almost on purpose. But take your time. Minimal downside, which is a beauty. Trying to see if this channel will kind of work itself out, widen out, give me one more touch point here to the downside. Morning, Nico. Just tuning in. How we doing? I'm 4-0 for the week, compounding green, overriding the red. Yeah, we're doing pretty well. In the volatility, at least. We're up. We've only taken one trade here, so we're up 2,100 bucks. That's where we currently sit. One trade so far today. Volatility is a little bit calm today, but that's okay. I'll take it. ATR is still in the mid-20s, which is just fine. Does the missus trade? No. No, she loves hearing all about it. But no, she herself does not trade. But I talk about trading all the time. So she understands the business. Inside and out. Yeah, the PDT rule. She hears about the PDT rule just about every other day. When I go off on rants, which I do, by the way, off camera. Good lord. Do not stand that rule. How do prop firms make money? If you blow your account with a $2,500 drawdown, and all they received is 17 bucks from you, yeah, they make money by betting and being right that very few traders end up getting to payout territory, which is the truth. Because most traders, you have to understand, go in and they just gamble. They just put on 10 minis and see what happens, and then they blow it over and over again. And the rules help balance out so that they can ensure that they have, ideally, a sustainable model that makes them money. No, Kings, you do not get payouts for evals. It's just a pass to get funded. Yeah, Bruce, this is the test of a third touch point. You could almost argue that this is a fourth touch point. But when you see it close beneath the EMA like that, it can add a little bit of resistance. That's just discretionary there. There's these little things that you catch on over time. And there's a million of them. Like that is one of those little things where, you know, when you see a third, maybe fourth touch point test and you close beneath like an EMA and then you open right below it and you get a back test of it, it can sometimes add a little bit of resistance, and maybe that's enough for the selling pressure to take over. These are the little things that help you make discretionary calls, which is why I think it's best to just focus on like 2 or 3 setups, even one setup to start, so you can pick up on all those things and it just becomes second nature for you. Jason, that's not true. It's a sim environment. They're not losing 2,500 when you blow. It's a sim environment. What a lot of these props are doing, the business model, is they take in eval money, they put it in a big pile. When people take payouts, they pay them out from the pile. That's the model. Yo, what's up, Worthy? How you doing? We are just waiting for something to set up for us here right now. We're kind of testing that downside trend line, right? That little ascending support, top right of your screen, the 2-minute chart. Seeing if we can hold that. Otherwise, if we end up flushing downside, then maybe we see a continuation setup. All right, let's see if we get a nice, big, clean push up out of this hole. Again, if we were to just see a rollover here, that'd be what I would call a mushy bounce, right, off of this. This was a little sloppy, to be honest with you. But if we can get a nice, clean bounce, clear this high, and then a retest, I would get long on the retest. Chris, if you were to try and play this bounce off the trend line now, you're picking up. Being a low probability, high potential return setup, how tight should the stop be? Match the ATR. Well, I'm speaking in hindsight now. However, even before this bar formed, I was looking at these. You see the buyers were pushing, the buyers were pushing these and forming these wicks. Okay, but if you were to like go right here, take an early setup on maybe arguably a little too early for this channel to actually have proved itself. I mean, as far as, okay, you got to think, well, what's maybe the probability? You could potentially try to go maybe 2 to 1, 1.5 to 1, maybe 1.5 to 1, reward to risk. But, you know, listen, to give an answer to that is kind of a loaded question because there's an infinite amount of ratios that you could run. I think a lot of people think that the answer is always like a specific, I'm not saying that this is you, Chris, but a lot of people, they do think the answer is like a specific reward to risk. It's far more fluid than that. It's a sliding scale. You can run whatever you want to run as long as the win rate plus or multiplied by the reward to risk ratio equals statistical edge. That's all that matters. So what I'm really watching for now, since we're kind of turning that potential channel maybe here into some slop, if we can get a nice downside continuation setup, then I become very interested in that. However, then I have to pay attention to, obviously, look here, top left of your screen, bluish purple line, the 20 EMA on the 5. If we can get a nice clean continuation setup on the 2-minute chart with a close beneath there, then that also turns then into a stop hunting setup, right? Because you have stops from the longs in this region. And that would be a beauty. So that's what I'm watching. So remember how we talked about, you know, it's highly probable that we end up seeing on the 5-minute chart, it's highly likely that we end up seeing a test of the 20 EMA on the 5 here. We'll see if we can get that here. Again, it's these little things as far as probabilities, like on the 2-minute, the probability is even higher that we see a test at some point during the day. So if you ever see, by the way, little tip, if you ever see a day, we're on like a 2-minute chart, it's been 4.5 hours and we haven't even tested the 20 EMA. The probability that that occurs is very high. Now on the 5-minute, since you have less bars, the probability is slightly lower, but it's still very high that you see a test eventually at some point during the day. Which seems kind of obvious, but it's something that I think a lot of people don't necessarily think of. Now, by the way, that doesn't mean you have to remember that the line moves, okay? So it can still pull higher, so that doesn't mean you should just short anywhere. But if it presents a good setup, something to think about. So we're coming in here for a test of that. Again, I don't want that in the way of a continuation setup for myself, so I'm paying attention there. Iris trying to wick these babies up. See, they're kind of stepping in here. Trying to create a little reversal sequence, but they'd really have to prove themselves. All right, I'll tell you what, I'll be back in 2 minutes. This needs to work itself out. All right, baby, we are back. And not too much happened, did it? We got a little potential early signs of a continuation setup, but then that little red doji kind of ruined it for us. So, let's see if we can get something here. Again, just one trade on the day, setting up $2,100, $2,130. All right, we are a minute and 18 seconds out here from the rollover of this 2-minute bar. You can see those bears are still kind of stepping in, wicking it back. See if the bulls can clean that up. See those bears trying to turn this back into a gravestone doji. Pumple. There you go. I think it's 10. 8 Apex, 2 Take Profit Pros. All of which are funded. There's no evals in there. Oh, you guys can see here. Let's look at this 2-minute. Right here. I mean, this is wide, but it's so obvious. You kind of have to draw it, right? On the 5-minute chart, that's actually kind of aligning. Getting close. It's within 15 points of aligning with the 20 on the 5. Again, I still expect a high probability of seeing a test of the 20 at some point here today. Doesn't mean it has to come on this bar, though, by any means. So it is very interesting. Lee, I had no idea the 90% Apex deal was single day pass also. Is that normal? I've not seen many 90% off moments, but now I am grabbing some more. Having 90% off plus single day pass does not happen very often. And Apex says that it ends today. Now, they have been known to extend things sometimes, but I'm not in that loop. As far as I know, they said it ends literally today. So I'm not, if you're like thinking about it, I'm not sure I'd take that risk. But you gotta use code BIG. Otherwise, you're not getting it. Dan, a little late today, joined, but 600 up. Cool, good work. Good work. Okay, now look here. Look here. So you see this clear channel on the, well, the 5-minute and the 2-minute, of course. What would I call that? You know, it's about a 60-point bounce, but in comparison, it's kind of mushy, right? So on a test here, you have the 20 on the 2. About 25 points away. Probably 20 points by the time you get the rollover and push upside, which is half an R. Now the 20 on the 5 here, by the time you get a test, is maybe 20 points away. Let's see how this plays out. Yes, Debo, I'm glad you caught that. So this is what I mean, guys. When you get a mushy bounce, the setup, it starts to deteriorate in quality. Now there can still be edge in it, but this here, if I remember correctly, I gotta look back. I think this here is the exact setup that we started on yesterday, and we happened to lose. That doesn't mean that I should just make every decision based on one trade. But the probability of success when you get a mushy bounce and then a retest, the probability goes down. I believe there's still some edge there until something else happens. But the probability is lower than had this been a push up through here and then a retest. It just is, because we're showing weakening buyers, right? So no test anyway yet, so let's see what happens. If we can get a strong bounce up through 19.2 and then a retest, then I'll take it. Bulls, help us out. Give us a nice little push up through 19.2, and then I'll take a retest. But a retest here, the setup quality is just deteriorating. It really is. Is financial juice down? I'm having issues with it. I'm getting an error. All right, here we are getting a nice little push. I want to see through 19.2. Eric, yeah, it's down. See kind of a 2-point flat top here. You could argue a 3-point flat top. Right about here, right? Again, I would need to see this push at least to 19.2, preferably above this high, and then see a pullback to this ascending trend line support. Yeah, Panther, for continuation setups, if that's what you were looking at, I would prefer to see a break right through. If you were going to take a 2-candle continuation right through that previous wick, the flat top we were just looking at, and then it closed at the high. So I always wait for the candle close on continuation. I do not wait for the close on channel scalps. What's up, Antu? How you doing? My stops are automated using the NinjaTrader ATM strategy. Take profits also go out automatically. Offensive, my copier is by Affordable Indicators. All right, again, I need to see the bulls push this up through 19.2 and then a retest. I would get long, ideally though, up through 19.210, which is the high of day. Because right now we're just struggling with this little flat top. As that ascending support gets closer and closer. It doesn't leave a lot of room here on a retest right now to hit take profit, and it's mushy bounces. So let's see if we can clear that out. You know, by the way, still here, no test of the 20 EMA on the 5-minute. So I believe that's coming here later today. As far as probabilities are concerned. Again, probability that we never get that all day is quite low. Possible, but it's quite low. All right, here's a nice little bull push. All right, here's the test of the intraday high. Let's see if bulls can push us through there, clear that level. And then a nice little back test of that ascending support level would be fantastic. See the bears trying to step in right around that intraday high. Man, bears just turning this thing right into a doji. You know, obviously that one bigger bull bar. That's why I wait for consecutive bull bars, right? I mean, one on its own, in my experience, is not enough to really have like a substantial edge, especially when you're coming into a level like this. High of day. Testing it now. Right, there we go. Small push into high of day. ATR, by the way, still at 25, which is not bad. It's actually slightly increased here in the last few bars. Well, still within my 25 to 70 ideal range, which is good because right off the open we had a couple bars like 30 range. So I was a little nervous we were going to see like a 9 ATR by this time of day, but it's holding up. You know, bears stepping in after that push into high of day, just barely a few points into high of day before the bears stepped in and said nope. See if they can't take that lower. Make a test of that trend line. The trend line is starting to line up a little bit better here with the 5-minute 20 EMA. Though again, as you guys know, with channel scalps, I need to see it test controlled. Like if this big bear bar just shot down and gave us a big test of that trend line, which here, this gives you a better view of the trend line. That'd be a rule break for me if I were to enter on that, just because you get a massively outsized bar. I think it destroys any edge that a controlled test would offer. Plus, there might be something going on as far as news headlines that you're not immediately aware of. Yeah, CS. So for the evals on Apex, it lists it as it's like a monthly subscription because it is, but for me, the opportunity cost of sitting in an eval for a month plus is so high that I trade the evals aggressively, so I'm never in an eval. I don't know, unless I'm doing something specific where I have to go slow. But just for normal, like I'm never in an eval for that long. So, you know, if you're taking that long, fine, then you'll have monthly costs. But for most people, it's going to be a one-time payment. All right, this is starting to look like a potential bear continuation sequence with a couple of big outsized bars. So this becomes very interesting. We're about 15 points out from a would-be test of that trend line. Actually getting closer than that even. Yeah, about 10 points out from a test of that trend line. 15 points. Well, let's see if the bears turn this into continuation. I gotta watch. Pumple, though that's, you know, obviously maybe not the most ideal way to do it. Yes, in theory, to answer your question, because I hate workaround answers. Yes, in theory, you could do that. in theory, technically, you could pass in 2 seconds in one trade. Not that you should shoot for that, but yes, they would allow that. As long as you don't hit the trailing drawdown in doing so. Alright, still no true test of that trend line here. And Bull's trying to create a little sequence here. You see that wick back up on that shrinking bear bar? It's all information. All right, here we are coming in for a test. I gotta tell you, I'm gonna hold off because we're seeing a lot of consecutive bear bars, and I'm curious if the market is really gonna attempt to do this. Top left, remember we've been talking all day. Here, actually let's zoom in. We've been talking all day about a test of the 20 EMA on the 5. In doing so, that would put this trade into some drawdown. Put on a little bit of heat, which is not a big deal, but this one just barely. I'm just gonna have to leave this alone, just barely. I was very close to actually putting that on, but I'm curious how this works out. Yeah, so I mean, here, look. On the 5-minute chart here, with an entry that puts you maybe a little over 10 points into heat just to test the 20 EMA on the 5, which the market's highly probable to do at some point here today. Again, it doesn't have to happen right now, but it's likely to do so at some point. Doesn't have to, it's just probable. And then, you know, you see maybe a little overcorrection, you go under it a little bit, maybe another 10 points. That's 20 points in the heat with a 40-point stop. With volatility right at the bottom of my range, kind of at 26, 25 right now, so a decent probability that I'd have to manage early at 20 points. To me, I think that just barely that tips the scale into a trade that I'm not really into putting on. So we'll see if I would have ended up making money, not that I care. Hey Nico, have you noticed that the first 5 minutes after a 30-minute bar close is usually pretty volatile? I think, you know, you're kind of getting into the weeds. No, it's not something I particularly thought about. But if you notice something there, hey, maybe there's something there for you. Listen, there's a million ways to make the numbers work. Just find what works for you and don't let me tell you. There's no right answer, there's only edge. Well, if you're just joining us here, here's where we currently sit. One trade so far today. Good base hit here so far, up 2,130 bucks. Now, a lot of questions about this, okay? This ends today, Apex said. It ends today, 90% off. This is the best it gets. 90% off single day pass. Make sure you use code BIG, Apex Trader Funding. A lot of people, since this is as good as it gets and usually doesn't last very long, they'll just load up on evals while that's cheap. Okay, but if you're more into the daily payout structure, Take Profit Trader is fantastic for that. It is currently 30% off, no activation fee, which is a big deal. They completely waive the activation fee, which makes it like half of what it normally would be if you use code BIG. Can you imagine trading while 250 people are asking you questions? No, hey, listen. It beats just, I'm always paying attention to the chart, even when I am answering questions, but it beats sitting here and staring at the chart in silence, I'll tell you that much. So I love it. I appreciate you guys asking the questions. All right, guys, I'll tell you what. If you haven't done so yet, subscribe to the channel. If you're not, you can see we're getting a roll over here. I'm curious to see if we end up seeing a test of that 20 on the 5. That's what I'm watching because it's highly probable that we see that sometime today. Subscribe to the channel. I'll see you tomorrow morning, 8:15 a.m. Central Time. Live every single day. All right, guys. Finish out the day strong. We'll finish out the week strong here tomorrow. Have a good one. See you in the morning.